All right, traders, this stock is currently having a short squeeze. The call options are exploding, and I'm going to explain to you on why I don't think it's too late to get in on this stock, what call options to buy, and why I believe this is going to continue to have a massive short squeeze as time goes on. So let's get into the analysis. For those of you who are subscribed to the channel, you are already well aware of this play as we are now up, and the play was BBBY, Bed Bath & Beyond. On October 7th, I posted this video, one stock to buy before the next short squeeze. And within that video, I had clearly stated that I ended up buying these call options right here on October 7th. The call options were the December 17th expiration. When I bought them, I believe they expired in 72 days. So nearly a leap option. You could say leap options are 6 months plus. But the point is, I had plenty of time, right? And it was a very safe contract because I played it safe and I stayed in the money. So within these contracts, I was getting filled in the 170s to 180s range. And I told you guys, this is a mid-term play. That's why I'm going to get an expiration that expires in 70 days plus, because this is a midterm play. So if I'm playing this for the midterm, no, I'm not expecting to nail the bottom. And I didn't nail the bottom. It's very hard to nail the bottom when you're dip buying a stock for the midterm, right? For the midterm. So with that being said, these contracts at one point, they were at $3.60. That was before I had bought them. But in terms of my entry, that was in the 170s to 180 range. And they went all the way down to 68 cents. When I bought these contracts, BBBY was trading in the lower 15s, and it ended up crashing into the 13s. And when it crashed to the 13s, the contracts had bottomed at 68 cents. Now I'm profiting because these contracts are currently up 58% and they're trading at 245, and I'm in at the 170 to 180 range still holding. I told you guys I'm going to continue to hold these out because this is a midterm play. It is very hard to be 100% spot on in terms of timing and entry when you're buying the dip on these stocks that are due for a short squeeze, but the volume is faded, and it just takes time, right? But with that being said, let's do an update on BBBY, and I'm going to explain to you why I'm continuing to hold my contracts and not locking in profits. So let's do an analysis on this ticker symbol Bed Bath & Beyond. Let's do a technical chart analysis. And before we get into that, let's go over two solid reasons why this is going to have a short squeeze. So I was looking throughout the news, and this is a very interesting article that I had picked up right here. And what I'm looking at is these two key bullet points. Let's see this here, right? And then we're going to go into the technical analysis. So unbelievable ownership levels. More than the entire float is locked up by the insiders and institutions, with insiders owning 1.5% of the float and institutions owning 111% of the float, and also high short interest. Bed Bath & Beyond's 45.5 million share float, 26.81 million shares, meaning 58% of the float is held short, right? This number has increased substantially, over 22 million from September. And we are now starting to see that massive short squeeze, with this continuation of this volume coming in here. You can see that the volume is about to surpass yesterday's volume. It actually already has. Yesterday was 8.3 million. Now we're sitting at 8.7 million. And it wasn't too long ago, or last week, this was trading in the lower 13s, right? So let's do an in-depth analysis on BBBY stock. Here's what I love about the chart. This is a classic gap fill reversal to fill the gap above. So it's a gap close reversal. You can see right here, there's a gap that's waiting to fill above right here at $14.98. And then you also have some gaps waiting to fill right here at $13.36. There was a gap to fill in the 1330s. And that key price level in the 15 to 13s where those gaps have filled, that's a key support level with huge upside potential for the midterm as it went to 25 and for the longer term as it went to $50 plus, right? So that being said, it's a key support level. And when these gaps fill, once they start to bottom out and show signs of a bullish uptrend, they tend to have reversals. And then what tends to happen is they tend to fill the gaps that are waiting to fill above. Now, here's what I love about this chart for the long term. You cannot go wrong with BBBY for the mid to longer term, because history has shown this stock has filled every single gap that has been waiting to fill over time. Let me just show you some examples. Let's just go all the way back throughout the chart history. You can see every time this stock gaps down, it rips back up, it fills the gap above, it gaps down here, it gaps down here, rips back up, fills the gap above, it gaps down, it gaps down, it gaps down, rips back up, fills the gap above. You could see over the long-term period of this chart, whenever this stock gaps down, here's some more examples. You had a gap down right here in the mid 40s. It went all the way to $3 a share, but then eventually it filled that gap waiting to fill above. So the point I'm trying to make is BBBY has a very solid foundation of filling its gaps that are waiting to fill above every single time, right? So odds are history is going to repeat itself and it's going to continue to fill the gaps over time. So from there, it's just about timing, confirmations, what contracts to buy. But with shares, you couldn't go wrong at all. Same thing with the midterm to leap options. You couldn't go really wrong there. So that's one of the reasons why I like this from a technical view. It's a gap filled play. And then in terms of confirmations to buy now, well, I explained to you the short interest data and I explained to you the gap close reversal. When stocks fill their gaps, once they close their lower gaps right here with huge upside potential, turn them into a support level, start having a reversal like you're seeing right here, they tend to explode up and they tend to start to fill the gaps that are waiting to fill above once that volume starts coming in, right? So that's kind of the chart analysis and idea behind it. The stock has a very solid, strong foundation of filling all of its gaps over time. So it's going to continue to do so. And what I'm doing is I'm playing for this gap waiting to fill here. There's a gap to fill right here at $22.20. That's where I see this heading by the end of December. Now, let's just say it doesn't happen. Let's say it doesn't happen by the end of December, right? Well, I either lock in profits or I cut my loss. But the point is, I will get back in with contracts 3 to 6 months expiration, and I will easily recover what I lost if I did end up losing on the trade. And I'll make a very explosive return on this, right? Because the point is, a matter of time, this stock is going to fill the gap. And once it does fill the gap within the contracts at the current price, you are looking at an easy 200% plus return. So with this particular strategy, you don't need a high win rate. You don't need to be right. And if this were to end up being a loss in my situation, I would simply size in bigger on the next trade, because the point being is, guys, that gap is going to fill. Look at the history and look at how quickly BBBY has been filling its gaps. It had a gap down right here from, the $24 range. And it didn't take too long. Let's see how long it took. That was in October 28th of last year. Same time we kind of have right around now. And you could see it took, until January. Early January, it ended up filling the gap, right? So it doesn't take too long for it to fill its gaps in recent terms. You can see it had gaps down right here. It filled the gap pretty quickly, had a gap down right here, filled the gap pretty quickly. So for the most part, it seems like for the short-term trend, it tends to take about 2 to 3 months for those gaps that are waiting to fill, right? So it could be January, it could be till January, but the point is that gap is going to fill, and I could always get back in. I could always buy new contracts. There's so many strategies I can do to this, but I'm riding this up to fill that gap that's waiting to fill right here towards $22. You also have another gap that's waiting to fill right here towards $27. So the sky's the limit. But the point is, we're going to see some sort of massive short squeeze by the end of this year. If not, heading into the first quarter, most likely in 2022. So there's always time to play it again if it didn't work out the first time, and you could take a bigger position size, and we're talking a 200% plus return. So it's not a big deal if you lose 50% on a contract when you make 200% back and you're sizing in a little bit heavier on the next contract. So that's my thoughts. That's my analysis on it. It looks phenomenal. Here's what we're going to have to see though. So just to make this very, very clear, let's go over the chart now, because there is a possibility this is what can happen. This is the reality for the short term of what can happen. Let me just show you. So see how it has this gap down right here, and then it forms resistance right here in the lower 20s to 19 range. And then it's looking great. It's popping back up, but it fails to break out. It comes crashing back down. And then same thing right here. It pushes up strongly. It's looking great, hits that resistance, then it pushes right back down, but then finally it explodes. So what can happen is this could go back to $15 a share. This could go back to even $14, $13 a share. It's definitely possible. But the point I'm trying to make is this is a solid stock to buy. It's going to go to $22, by the end of December. If not, then most likely first quarter. It's going to happen. Get the leap options. In terms of the technical analysis, your resistance levels are right here. Your clear resistance levels are at 1550s, and it has now turned 1550s into support. It's closing strong towards the highs. With that being said, your next resistance level isn't until 1680. So here's the analysis. If 1680 can turn into support, we are on track to go to $18 a share. Things get explosive. Write this down. Things get explosive once this hits 18. $18 is going to be your key level. So let's point out our current key levels. Our current key levels are going to be, let's see, what's the high of this? 1680 and $18. These are our two key levels. Here's what you need to understand. If 1680, say it hits 1680, it reacts as a resistance level, it turns it into resistance, then it's going to be heading back down into the, higher 15s to lower 16s. Now, if 1680 turns into a support level, it breaks out, pulls back, turns it into a support level, it's going to explode up into $18. $18 is your key level. This is what we call a gap breakout. A gap breakout is a breakout level where there's no resistance. So once this goes above $18, your profit and margin is up to fill this gap that's waiting to fill above. So if you see this breakout past $18, and then once it has a pullback, and if the bottom of that pullback is at 18 or higher, it's forming higher support, it's forming supports, consolidating, starting to bounce, it is going to run and have a massive breakout into the 20s. It's going to start to fill that gap above. So look out for that key breakout level, guys. But yeah, I don't think it's too late to get in. In terms of my contracts, like I said, I bought them in the 170s and added in the 180s. They're now in the 270s. So many people doubted me on this play. They thought it was a joke. They were like, "Oh, Bed Bath & Beyond." You should see the comment section, and like it's like 30% of the people dislike the video. It is what it is, man. But I'm sharing with you the opportunities that I see value in, the best plays. And I think this is going to continue to run. And if not, I explained to you how I'm still going to make money, even if this didn't work out. I'll simply get back in with a bigger size, ride it back up to 22. But that's my thoughts. That's my analysis on ticker symbol BBBY, Bed Bath & Beyond. Looking for that, 1680 now to turn into support. If that can happen, then we're on track for 18s. It explodes. Once 18 breaks out, turns it into support, that is when this stock explodes. It has that gap breakout and runs and fills the gap. So that's what we're looking for on BBBY. I'm going to continue to hold. Like I said, if this pulls back, I have no problem with that. It wasn't too long ago where this was in the 13s. Many people were in fear, cutting their losses. I was continuing to hold my contracts because they're midterm. I understand how this works, and it was having a gap close reversal. It didn't have its gap close reversal right here at 1490s. It had its gap close reversal right here in the 13s. You can see there's a gap to fill at 1336 right here. Gap to fill at 1336. See how the stock explodes? Well, look at where it recently bottomed. 1338, and then it explodes, right? So that's my thoughts. That's my analysis on it. I'm going to continue to hold out my position and keep you guys updated.